Monday. What's up, everybody? Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, joined by a guest star, Mariam, here to say hello. We're playing Mr. Dad this morning, so I've got the baby in the office with me. That's what I trade for. It allows me to stay and play with the kiddos and as they say, live life on your terms, right? So we've got the little girl with us. So if you hear some noise in the background this morning, that's exactly what it's going to be. So I'm going to put down the little baby, and then we're going to dive into the big picture. So starting off today with the big picture, we have the S&P up 22 points this morning as we have continued our rally, which started last night right at the open. So we opened up with a little bit of a gap higher and traded higher right from the opening bell, if you will. I did take a look last night at a little 15-minute wick over wick level right here for a decent opportunity for an entry. Hindsight being 2020, the better entry might have been right, kind of retesting the open as we did get a nice bounce off of there. But this wick over wick area, I think, is still very much in play and one worth taking a look at some point for today. Now, obviously, since we're at near the all-time high, the high base breakout always exists above the all-time high, and so if price breaks above the high with proper basing, then there's a bit of a move. In the NASDAQ, very similar picture, although not as clean. I will say that there's not a whole lot to look at today because there's so much sideways price action. What we want to see is price moving out of this sideways price action and then taking a little bit more of a firm direction on where we think price can go. So when I look at the NASDAQ, I've got a couple of demand levels below me, but they're not super clean. I have some supply levels above me, but I'm not interested in the supply because of a breakout above here would be a breakout to a new all-time high. So these demand levels down below me are set in as confirmation entries, especially with all the basing that we're getting through this region right here. Looking at crude oil. So crude oil up above us on the hourly chart. We have a decent little drop base, very nice drop in here, but it has to be a confirmation entry because our bigger picture trend is up. And so my thoughts last night in looking at this is that this is a really nice move up and a rest and could be the next leg higher. And that's why that supply level, while it looks clean from an hourly chart perspective, has to be a confirmation entry because it is going against the big picture trend. We put in a little bit of this is actually a very clean double bottom. Double bottoms should not look like straight W's. They should be kind of crooked W's. And this is a double bottom pattern. And so with that double bottoming pattern, I would look to see if we get above 63.96, that's a decent little run from 63.96 up to 64.45. I'll take 40 ticks in the in crude oil any day of the week. Especially if I've got 20 ticks or less worth of risk. So keep that in mind for today. And then gold. Gold, we were looking last night at what looked like an ascending triangle, symmetrical triangle pattern. But in reality, gold popped up out of that level. And we talked about the fact last night that I wasn't looking to trade the breakout because I wasn't sure where the breakout was going to go. And all of these wicks were a little bit too suspicious for me to want to take a big heavy entry. Now, I do think that this supply level up here is a pretty clean level. My problem with this supply level now is that we've come close to it without really getting in, and so it needs to switch to a confirmation style entry at this point. From a demand standpoint, if we get a retest a bit lower, this demand is a pretty clean level, but it's certainly on a 15-minute chart, which lowers the probability. So those are our big picture markets for today. Not a whole lot to cover and talk about. I will say that if I switch over to the dollar, we talked a little bit about the dollar last night in our live trade room. And the thing that we talked about specifically when it came to the dollar was that we had a big run higher, right? And this big run higher that we had starting last week did leave a pretty decent area of demand in its wake. Now, that area of demand that was left in the wake of the dollar says, okay, if price comes into this area of demand and we start to get a rally up out of that demand area, Then I'm going to look for supply in a lot of my currencies. So when I take a look at something like the euro, I've got some supply up above me. If I take a look at the Great British Pound, I have some supply up above me. If I take a look at the Australian dollar, I have some supply up above me. So when I'm looking at all these currencies, keep an eye on the dollar. If the dollar comes into demand at the same time these currencies come into supply and we start to see price move, then you might have a decent trade opportunity. Okay? So those are some of our big picture ideas and some big picture things for today. But certainly we would be remiss if we didn't talk about our stock in the news. So our stock in the news today is Netflix. And talking about Netflix, in my mind, the fundamental problem with Netflix is that they measure themselves in subscriber growth. And so at some point what happens is a lot of the people who own Netflix and are subscribers, they're already subscribers. And so what happens is if you're continually measuring in subscriber growth, once you get mass market penetration, in order to get the same percentage growth is significantly more difficult. And so Netflix tries putting out fresh content and new ideas in order to get that. But by measuring in subscriber growth, that's really, even though they may raise prices and get increased earnings, but they may not have increased results. So looking at Netflix, we had a gap down on an unhappy earnings report a few days ago actually. And so on that gap down through our unhappy earnings report, we can see that price has chopped sideways ever since that area. Now, even before then, Netflix was, if I just throw a quick comparison up here compared to the S&P, we can see that as the S&P was continuing to rise, Netflix was definitely not rising at the same rate of speed. Now, Netflix also didn't take as big of a fall when the S&P, came down hard, as a lot of people, decided that they were going to stay in and watch movies instead of going to the movies. But as more competition from streaming has arisen, Netflix has really slowed its momentous growth. And in doing so, has possibly set up, I think, for a leg down. Now, I'm not for certain that leg down exists, but what's great is I now have a reason to consider an entry, and that would be price basing here in front of this 500 and a breakdown below 500. Now, we've been kind of range bound between 575 and 458, so there's a couple of ways to play this. Number one, you could just play for the short below 500. Number two, you could theoretically do some sort of an iron condor or a vertical spread, a vertical credit spread to take advantage of the fact that we don't think prices are going to rise above a certain level or fall below a certain level and then just play the range. The third thing that you could do is you could decide an area where you're willing to own it and sell puts in that level. The point being is that overall, it's underperforming the market in general, and I think we could see a bit of a breakdown, but I certainly have no action to take until I get below this $500 mark. So, hopefully that makes sense to everybody. If you have any questions, as always, send me an email, chuck.fulkerson@tradersarmy.com. Until tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.